You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's find out together. It is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever scintillating, ever engaging, at least we tend to think so, Options Insider Radio Network. Reminding you, even though we've been around for a while, this January was, of course, our 16th anniversary. So we got some skin in the game here, but all the new folks flock into the show. If you do like what you hear, do keep rating and reviewing it on your platform of choice. The influx of new reviews obviously equates to new listeners. So if you like what you hear, you want more people to discover the show and indeed the network, leave a review wherever you're listening to this fine program. It's available pretty much everywhere under the sun at this point. So you have no excuses on the platform side at this point. And of course, if you want even more content in your lives, you don't want your broadcast week to end with Volatility Views on Friday. You want to come back for a little bit of Options Oddities action, as well as a series of great pro Q&As. I just looked the other day, nearly 200 hours of great pro content over a week. You can just sit there and binge of just nonstop, no bathroom breaks, no meals, just nonstop pro content. Where do you go get access to all of that? Plus the giveaways, the live streams. You want to come heckle us live on this show, everything else we do on the network, all sorts of fun. Theoptionsinsider.com/pro is the place to go to learn more as we turn our attention now to see who's joining us for this Volatility Festival here. To kick things off, let's head on down to the Southern Volatility Mecca of Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to Volatility Views, sir.
Hey, good to be here. Quite the day for the markets. Going to be, I think, an interesting few hours here, Mark.
Who knew it? Vol can go up. Who thought such a thing could happen? But apparently it can. So we'll get into all that fun. Also joining me, we got another twofer fighting their way into the NASDAQ hot seat again. First, we have our old friend now. Old friend. He's been on twice in a row. So he qualifies as an old friend these days. Mr. Kevin DAVITT, the head of NASDAQ Index Options Content. Kevin, welcome back to Volatility Views. 2 weeks in a row. You starting to feel the groove, sir?
Oh, man, have I got my groove. Back. We got too many hyphens in that intro, Mark.
Lots of hyphens. You gave our VO guy a bit of a workout. He almost passed out towards the end, but he gave it the old college try, and he got it done. And we kicked it off in high style with a duo in the hot seat last week with Mr. Russell Rhodes, bringing it back this week with another newcomer to the network and indeed to the program. He is Jay Soloff, the editor and lead options analyst at Investors Alley. Jay, welcome to the Volatility Views program.
Thanks, Mark. Thanks for having me. And tough act to follow there with Russell Rhodes, who I know quite well.
He's okay. He's all right. We like him a little bit around here. But Jay, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the options and indeed volatility markets, as well as what it is you do day to day over there at Investors Alley.
Yeah, certainly. And I'm also still trying to catch up after the hyphens, and Mark's got a similar, Mark, who we met a few times at the Money Show, has got a similar background. We're both CBOE floor traders, and Kevin as well. So it's a small world in the option trading world. But I was a market maker back in the day, back in the Stone Age when things still traded in the pits. But now I've been doing, let's call it financial publishing, financial media for 12 years, options education, newsletters, trading services. I focus a lot on education, particularly on the volatility side, and I'm more of the option seller. So today is not my favorite sort of day, but it happens.
We've had a few option sellers on this show over the years. We kicked off this show well over a decade ago. My co-host was a guy who very infamously said options should be sold or not sold, never bought. That was his catchphrase. So we have a long history with selling vol here on this program. As we keep on rolling, let's kick it off, listeners. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to Volatility Review, the portion of the show where we break down the week that was and indeed still is. From a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into our final trading day of the week here, the market's been fighting. It's been topsy-turvy. Kicked off the week looking pretty dire, had the biggest sell-off we've seen so far this year. But of course, today is not done yet. And so that kind of spooked everybody after the weeks leading up to that, mostly seeing the markets trying to struggle to maintain their way into the green. Even on days when they were selling off, they would manage to somehow close in the green. We did that again yesterday. We were selling off, and all of a sudden, bam, back in the green by the end of the day. So the whipsaw is in full effect yet again, listeners. But today, it doesn't seem like we're heading for that, at least for right now. Again, the day is young. Anything could happen by the end of the day. But right now, we've been pretty much in the red all day and been hanging out pretty close to the lows for the better part of the last few hours here. S&P right now off a little over 1.5%. The Dow off a little bit less, about 1.4%. And the NASDAQ, as it is wont to do, leading the charge to the downside, off about 2.15%. So, of course, we were glued around that 4,100 level for a while in the SPX, listeners. We are well below that now, down right around 39.5. Have been hanging out there in that range for most of the morning. That means our vol friends, as I was joking at the start of the show, people have been writing in lately. Does it make sense? Is it even worth it to buy calls in any of these vol products anymore? Well, this week, at least, it worked out all right, at least for now. We shall see as the day progresses. VIX, as we kicked off the show, a little bit north of 22, about 22.20, puts it up about 1.5 points from where it was this time last week. So a pretty frothy level. We haven't been up here in a little bit in VIX land. VVIX still frothy, but a little bit lower. It's down about 3 points to about an 87. We were obviously hanging out at about a 90 on the show this time last week. And VOLQ, aka the at-the-money vol of the NASDAQ 100, hanging out a little bit north of 26.5, about 26.60 when we kicked off the show. Puts it up about 1.5 points from where it was this time last week. All right, let's go back around the horn. Let's start with our guest. It is his first time here on the show. So, Jay, you get pride of place, sir. What is catching your eye and lighting up your tape in the world of volatility this week?
Well, it's been one of those weeks, right? The news that I guess everyone kind of expected but didn't hope for, basically with higher rates on the table, 3 quarter-point hikes pretty much built in now to futures, and we'll be stuck at 5.5 for into 2024. So vol is up, right? VIX, let's just use VIX here for, VIX is up, but that news is now, I think, pretty much built in, right? So I don't really see a 50 basis point hike coming, which I could see spike vol a little bit higher if people start to really expect that. I don't see that. So I would expect vol to start coming down next week now that it's built in, because realized vol is still not, what are we talking about, 16, and VIX is 22. I mean, that's forward looking. There's some things to worry about, but at some point you have to look at realized vol and look at the VIX, and I feel like we're a little high right now. Granted, again, the news has driven it, but now the news is there, right? So that's kind of what I've been seeing, at least today and yesterday.
We were flirting with higher levels a little bit early in the morning. Kissed 22.90 in the VIX cash this morning. Sounds like, Jay, you're thinking that's it for a while. That's kind of the apex for vol in the near term.
Yeah, it's gonna unless something totally unexpected, comes, hits the tape. I think that we're kind of at that spot, right? That people were worried about. So where's the direction from here? That doesn't mean that stocks can't sell off more, but I just don't see VIX like spiking above 25 or anything like that without any crazy new information.
Interesting. We will come back to that at the end of the show for the crystal ball, Jay, and you will be allowed to put pen to paper and come up with an actual number. For now, intriguing stuff. Kevin, same question for you. Obviously, a topsy-turvy week. Kicking off the week, not so great for the bulls out there. Took a bit of a drubbing. They fought their way to green yesterday. Today, it doesn't seem like we're heading that way. But again, the day is still young. What was catching your eye out there in a truncated but topsy-turvy holiday week?
I do enjoy these truncated weeks. I enjoyed my Monday holiday. In terms of what's catching my eye, I would sort of piggyback on Jay's point about relatively low realized volatility for your major indices. Those short-term measures, so I'd be referencing like 10-day realized vol for both the S&Ps and the NASDAQ 100, and then go out to the 30-day, are still very near the lowest levels in a year. So that volatility risk premium, if you will, being priced in now arguably looks a little bit rich. In terms of here and now, you see these major indices right around their 200-day moving average. Now, I am not a technical trader by default, but I tend to be aware of those bigger numbers like the 50-day and the 200-day. So I wouldn't be all that surprised to see some chop around here. When I broaden my perspective, both the S&Ps and the NASDAQ 100 strike me as range-bound in the near term. So if you want to use the SPOOs as your reference, something like 4,200, 3,800. And because I want to focus on the NASDAQ 100, I think you'd be talking about something like 12,500 and 11,000 on the downside there. And we're kind of chopping in the middle. My expectation would be for more chop in the near term. And I think this is a trading market as opposed to a trending one.
Does seem to be the case. Mr. Meatball, last but not least, sir, what is catching your eye out there in a very topsy-turvy, truncated holiday week?
They're really taking it to the NASDAQ today. Apple is down big. Google down big, Microsoft down big, Tesla, Amazon. That's really bad. And consumer discretionary, XLY is and XLK are both down big, leading us lower. Financials look a little better. Oil doesn't look awful, but it's pretty much a sea of red. Stands maybe about. I'm looking at my watch list. There are 1, 2, 3, 4, 5, 6. I'm 11 stocks up on my board of about 150. So it's a sea of red here. I would note that it's interesting that the Russell 2000 is actually outperforming the S&P. That's a little bit unusual on a big down day like this, but it's something to be watched.
Something to be watched indeed. You know what else is to be watched is the volatility surface. We say it here all the time on the show. The answer to all of your volatility questions is lurking somewhere in there. You just need to find it. Coming into the show, listeners, we have, of course, that front portion of that curve ticking up a wee bit this week. As we were kicking off the show, we had the March future up, not quite a full point, about 0.8 of a point. April kind of moving in lockstep with it, up about almost 0.8 of a point, about 0.7 of a point. So you see in those front couple of contracts are really moving in lockstep again, which has been something we've been noticing for a little while out there, and kind of interesting. We also are seeing a nice still aggressive slope out there all the way out to the October-November timeframe where it kind of tops out there. Jay, we'll start with you. First off, it's your first time on the show. I'm curious, are you a big watcher of the vol term structure? And if so, what's catching your eye out there this week?
Yeah, absolutely. That's one of the things I've tried to teach my subscribers. That's the best word for it. About volatility is that, looking at the absolute level is certainly important, but the shape of the curve, and particularly if you're trading the ETPs, because the futures role is such a big part of that. So I definitely look at contango backwardation levels. It's as you mentioned, it's come down quite a bit. I think we're at 2% now, about 2% from first to second here, which is come down quite a bit. The curve is flattened quite a bit. We have from yesterday just kind of a straight move. If you look at the previous close, contango's diminished, but also the whole curve is just shifted up across the board. So, that's a meaningful volatility move for sure when you get the whole curve shifting, and also you're seeing that front month shift up a little bit. But again, I do think that this is probably the peak, barring some crazy new information. I feel like next week is going to be. It's going to be a little bit softer on the volatility side. And of course, I'm talking my book here as an option seller, but I do genuinely believe that.
You're underselling yourself, which I appreciate, the not relentless self-promotion. But this guy on Twitter is known for his artistic takes on that vol surface. So why don't you let people know how they can follow you on Twitter and look at the hilarious shapes or interpretations you give for the vol surface?
Yeah, I'm due for one. It's been a while. Jay Soloff, letter J. Soloff is my Twitter handle, with the Chiefs logo, being the Kansas City native that I am. And of course, Super Bowl champion Chiefs.
Oh, did something happen there with football recently? I was unaware.
No, I thought something may have happened. I mean, been kind of a blur the last couple of weeks. I don't really remember, but yeah, I like to. For some reason, I was messing around. I drew, I don't know what it was, a dinosaur or something on a vol curve, and it got a whole lot of attention. And I realized that doing fun stuff like that actually gets a lot more attention on Twitter than actually providing meaningful information. So I've done quite a bit of that, and I'm actually due. It's probably been 6 months since I've drawn anything
Yeah, if you get Ben Eifert engaging with your vol thoughts, you're doing something okay.
Another former guest on the show here. By the way, Jay, I'm looking at your Twitter right now. Anyone who can use glamdring correctly, you're okay with me. So I like that. Well done. A good follow there on Twitter. Mr. Meatball, last but not least, sir, what is catching your eye out there in the land of the volatility surface?
Yeah, it's incredible how flat the curve got leading into this. And we were kind of basically all the option contract or all the futures contracts were essentially sitting on each other. The curve is still really, really flat into the basically out to May. And then it starts to steepen up a little bit. But and then despite the selling today, we're still remain in a contango with volatility trading at a volatility futures trading at a nice premium. Huge spread between VIX and VIX 9-day, which should tell you something. 9-day about 19%, VIX itself at 22. And despite being down 60 points and a pretty decent intraday range, VIX has just been kind of softening up all day.
And Kevin, we got us so excited with the Twitter plugs, we didn't get a chance to get your full thoughts on all things vol surface, sir. What's catching your eye out there this week?
So I'm taking in this situation a little bit of a different path, but it's related because you guys bring up the vol surface and you bring up vol of vol, and these things are all related to what's going on in index options, how vol is being priced at different points along the curve. And I would just point out that a friend and fellow sort of volatility focused type, Chris Sidiel, was in the NASDAQ offices this week, and he did an interview where he spoke about longer term NASDAQ 100 wings. And with the kind of collapse in skew over the past handful of months, he argued that so I'm talking like 10 delta options, be it calls or puts, he was focused on calls, were arguably looking cheap, and pointing out that you don't need options like that to move all the way into the money to capitalize on them. If you see a meaningful shift in how volatility is being priced, and in his case, he's looking further out the curve, you can see a big move in those wing options. And I just found that somewhat compelling, going back to Mark's point at the kickoff about the names that have led this move both higher and lower in 2023. If the Fed is able to engineer a soft/no landing, I think you could see a pickup in the right tail. And those options arguably look cheap right now. That's just my opinion, man.
A little bit of cheap skew, never a bad thing out there. You know what else is never a bad thing, listeners? A little bit of vol options paper. Let's kick things off, looking out to the land of VOLQ. Do a quick top 5 here. Number 5, we've got the March 25 puts. Number 4, the March 24 puts. So that March put vertical still hanging out there. Number 3, we have the March 24 calls. Number 2, all March all the time, the March 22s. And rounding out the top 5 out there in VOLQ this week, the March 18. So interesting. We're not seeing a ton of that deep in the money paper there. We were starting to see pick up out there in spikes towards the end of last year. In particular, VOLQ, as you said, listeners, hanging out at the beginning of the show right around 26.5, 26.60. So most of those strikes making a decent amount of sense. At least I guess you can argue the 18 is a little bit in the money now. But outside of that, nothing too crazy. Let's see if you find anything crazy out there in the realm of VIX options. And at least for right now, the answer is no. Kind of a bit of a quiet day out there. Usually you see a lot of red on the screen. That translates into a decent pop on the VIX options front. Not so much today. We've seen more paper lately in kind of the whipsaw days than we're seeing in the unidirectional days. And today, that's another example of that. Just around 250,000 contracts on the tape right now, listeners. The ADV also not doing a heck of a lot over the last week. It's only up about 1,000 contracts. It's hanging out at about 690,000. That's still an impressive run. Just since the Fed popped off, really, we've seen that gap up from about 500,000 a day to threatening 700,000. So that is not a small move. Over the past week, it's kind of been treading water, still hanging out right around 690,000. And then looking at the top 10, what are these size positions? What are you folks slinging for size out there in VIX options? Let's find out, listeners. By the way, we've been all calls all the time for weeks now here on the show. We finally have one put making its way into the top 10 out there, and it's right at the bottom, number 10, 173,000 of the March 18 puts. So it's not hard to find. It's right there, listeners. And the rest is, as we've come to expect, all calls all the time. And as is the case with VIX, usually the higher the better when it comes to strikes out there. Let's see what we can find this week, listeners. Number 9, 173,000 of the March 40s. So compared to the usual paper we see out here, it's actually pretty reasonable. Number 8, we got $1.90 of the March 25s. Again, that's very reasonable. Number 7, 224,000 of the May 50s. We were talking about those on the show last week. Is that the return of 50 Cent? Is he on the 50 strike now? Different time when you got to buy the 50 strike for 50 cents out there, but intriguing nonetheless. Number 6, 225,000 of the March 26s. So we are starting to get some, dare I say it, reasonable strikes sneaking in there as well. Not all pars and above as it used to be last year. Number 5, 230,000 of the March 75. So they're still there. They're still popping up every now and then, the fun strikes, listeners. Number 4, 243,000 of the March 24 calls. Number 3, 290,000 of the March 30s. Number 2, 291,000 of the June 40s, and rounding out the top of our list again, 308,000 of the June 30s. This is part of that long-term vertical, the June 30-40 vertical. We were kind of debating on the show last week with Mr. Rhodes. He took umbrage at this structure. This is part of, we had a question in one of our pro Q&As to kick off the year, and they asked Russell that exact question. How would you prepare for a spike in VIX over the next 6 months? And he's been writing about it on his Substack. He's turned it into weeks and months of content as he's been adjusting and rolling the trade and everything else. But it's been primarily bullish risk reversals and very near-dated ones, not the long-term set it and forget it 30, 40 verticals. So when we talked about this on the show last week, he was not a fan of that, but intriguing stuff nonetheless. I could certainly see where he's coming from on that front. Let's do a quick rundown here of the action we did see on this truncated holiday week. I'd be curious to get everyone's thoughts on the paper that caught their eye this week. Let's start, like I said, today, kind of the light day of the week, only about 250,000 contracts on the tape. The big dog, such as it is today, 23, almost 24,000 of the March 20 puts, followed by about 20,000 for number 2 of the March 19 puts. Number 3, 11,000, so already fallen off today, listeners. 11,000 of the March 40s. Number 4, 10,000 of the March 27s, and rounding out the top 5 on a pretty light day, 10,000 as well of the March 28 calls. Looks like some vertical action there. Yesterday, a little bit more paper on the tape, 453,000 contracts. The big dog yesterday, 38,000 of the March 35s, followed by 35,000 of the March 40s. So possibly some vertical action kicking off there as well. Then we drop down to number 3, 23,000 of the May 24 calls. Then number 4, we have 17,000 of the March 22s, and rounding out the top 5 on a pretty light Thursday, 16,000 of the April 19 puts. Did sneak in some AUG 90s there for number 6, 15,000 of those yesterday. So some of those fun strikes still managing to sneak in, listeners. Wednesday, 399,000 contracts on the tape. The big dog on Wednesday, 48,000 of the March 25s, followed by 36,000 for number 2 of the March 20 puts. Number 3, 31,000 of the March 19 puts. Number 4, 21,000 of the March 30s, and rounding out the top 5 on Wednesday, 16,000 of the April 20 puts. Tuesday, the busiest day of the week, at least so far. Today, not dumb. It doesn't seem like it's going to threaten it, at least not right now. Tuesday, 633,000 contracts on the tape. The big dog on Tuesday, 37,000 of the March 30s, followed by 35,000 for number 2 of the March 19 puts. Number 3, about 30,000 of the April 20 puts. Number 4, 27,000 of the March 25s, and rounding out the top 5 on the most active day of the week, such as it was, 26,000 of the March 40s. Obviously, we were off for the President's Day holiday here on Monday, listeners. Mr. Meatball, an intriguing week. You might think even on Tuesday, we'd see a little bit more paper given just the aggressive nature of the sell-off. But again, VIX hasn't responded lately just to the unidirectional days. It does like the whipsaws. When we're just selling off or just rallying, we don't tend to see the big spikes of paper. And Tuesday, another example, the busiest day of the week, but we didn't even kiss 1 million contracts on a day that was ostensibly the worst day of the year so far. Mr. Meatball, obviously a weird week. Anything catching your eye out there on the VIX options front this week, sir?
Yeah, I'm a little surprised we didn't see when VIX was really popping out a little bit of profit taking and some of these big call purchases start to come off the table. And We've not seen really a lot of like panic hedging or anything like that. It has been, like for instance, the biggest trades today are March 20 puts and March 19 puts buying. And then you get a little bit of March call action, but not very much. They continue to just, we'll get these huge trades or nothing at all. It kind of feels like in VIX, in the volatility index right now.
Feast or famine out there on the volatility front. Speaking of buying calls and making money, it looks like our pro listeners in the live chat are talking about just that. We got Frank 1209 saying he bought some VIX calls and they are working out nicely. Took off half this morning and working the rest now. Well, there you go. See, you can do it. You can make money owning upside on the old volatility front. You just got to be a little quick in the trigger finger. I think Frank realizes that, getting the heck out of Dodge. So well done to you, Frank. Let us know which strikes, what you ended up buying out there. I am kind of curious. Sounds like he has probably some near data stuff, but you never know. Let's go out to Kevin. Same thing. So anything catching your eye out there in a truncated holiday week? Not the busiest of weeks, but we did see some paper going up out there, sir.
So I would focus on, I think, vol-related adjacent moves that catch my interest. So what I mean there is that you're seeing behavior somewhat similar to the sell-off last year, where financial conditions, I'm referencing the Goldman Sachs index there, is moving up above 100 for the first time this year. Financial conditions are tightening again, as you would expect when you see rates move like they have over the past week or so. I would also point to the MOVE index, so kind of that VIX for fixed income, which has been moving higher again of late. I think that's somewhat concerning. And I would point out the high degree of correlation, at least of late, between the dollar index and volatility products. So those are things where when you see them moving in concert, I take notice. And if they're not on your radar, I think arguably they ought to be.
And Jay, bring up the rear, sir. Anything catching your eye out there in the VIX options this week?
I don't generally look at VIX options. I've been more focused on the ETPs, like UVXY, for instance. So adjacent to VIX options, and it just a little bit maybe surprising that volume is not even meeting the daily average that you would normally you see. I think it's traded something like what are we looking at? 150,000. So it might end up passing its daily average. But UVXY tends to be the most active of the ETPs. And I would just expect there to be maybe more action. And from what I can see, a lot of it today is just call selling, probably for short, just stuff that expires today, probably profit taking. I mean, I see maybe a net short 1 million delta of trades, and UVXY, of course, obviously just an estimate, but not necessarily what I'd expect on an up vol day.
Speaking of profit taking and some calls, looks like Frank said he bought the weekly 23s expiring today in VIXland. So well done to you, sir, out there getting out while the getting is good out there. We've said it many times, listeners. You got those VIX calls or whatever vol product it is to the upside. Got to be a little quick on the trigger finger. You got to capture those upside moves when they happen, because they tend not to hang out. I mean, not all the time. Sometimes they blow through strikes, but these days, at least, the upside spikes are somewhat short-lived. You got to get while the getting is good. Speaking of getting while the getting is good, something is afoot today in good old SVIX. SVIX hanging out at 16.25, down about 0.75 of a point. SVIX, of course, our inverse volatility friend out there. And usually it's pretty quiet, as reflected by the ADV. It's about 700 and nothing contracts out there, and it is continuing to fall week after week. So folks aren't really playing in SVIX, but apparently that is not the case today, because folks are coming to play. There's already 2,510 contracts on the tape right now. So I had to take a look and see what is going up out there. It looks like you have about 1,000 of the March 8 puts and 1,200 of the March 17 calls. They went up not as a spread, but around the same time. So it looks like maybe legging into a bit of a bullish risk reversal, selling the puts and then buying the calls, or looks like they did it backwards, actually, buying the calls first and then maybe selling the puts. I don't know, Mr. Meatball, we've talked on the show in the past about covered calls in SVIX, and folks liking that use case. I think Russell's been on here extolling the virtue of those in the past. What about doing it the other way? What about a bullish risk reversal in SVIX? Does that float your boat?
Well, I'm here to tell you it was not a risk reversal.
It wasn't?
Two separate trades.
You're bursting my bubble, sir. It's more fun as a risk reversal.
Because I know exactly who bought those 17 calls. It's possible that somebody whose name is very similar to mine suggested buying those calls to a group of people, and they all jumped on it.
Yes, the old newsletter trade. Haven't seen those out here in a while. I like it. It's more fun to talk about it as a risk reversal, but they did go up separately, so you can't always make those assumptions. Fun, though, nonetheless. We don't see a ton of paper here in SVIX. And then today, apparently bucking the trend. Let's just do a quick top three, because there isn't a ton of paper out here in SVIX listeners. Number 3, we got the March 15s, about 600 of those bad boys. Number 2, 750 of the March 10s. And rounding out the top of the positions out here in SVIX, 1,064 of the March 25s. I got a feeling after today that's going to change. We're going to see these two strikes. It is interesting that they both lit up very close to each other when there's not a lot of paper going on the rest of the day and hasn't been all week out here in SVIX, but intriguing nonetheless. Jay, these products, these inverse vol products, can be somewhat controversial. I know not all of our guests are fans of them, post XIV, post Volmageddon of 2018. A lot of people kind of washed their hands of the inverse vol space. I'm curious for you, where do you fall on inverse vol products? Are you a fan? Are you not a fan? And then B, what are your thoughts on our friend there, SVIX? Anything catching your eye out there this week?
Well, let's just say that SVIX is probably the single largest position in my retirement, one of my retirement accounts. So I'm a big fan. I was, champing at the bit to get a full inverse vol product back out there since XIV. Since Volmageddon, and of course SVIX solves kind of the primary problem that.
So do you like my call buy, or do you not like my call buy?
Oh, I love it. Yeah, I love it. I should probably follow suit, actually. Although I do like the idea of covered calls in SVIX, not at 17, but maybe a little bit longer term at a higher strike. I actually haven't looked at the premiums in there. Sometimes they're not high enough to make it worthwhile, but maybe, yeah. I mean, just looking at, you can sell like the April. Yeah, it's not bad. There's not a ton of the market's still a little wide on the options on the further you go out on SVIX, but I love the product. It's to me it's almost a safer way to be long equity, and particularly in a choppy year, because vol is gonna have those days where it goes down, and you're gonna have the futures roll, and you're gonna have all that. And even if stocks just kind of move sideways, then SVIX is still gonna perform. So I'm definitely a big fan.
Now let's keep on rolling into more specific tickers. Let's go on out to UVIX, the sibling product for SVIX. Obviously, this is the levered, not the inverse product here, listeners. Hanging out at about a 21, up about 1.5 points since our show last week. So getting back some of the juice that it had lost, right back around the level where it reverse split to not too long ago. So the market obliging them and lifting them back up to that reverse split level this week. Seeing some paper on the tape out there today as well. The ADV is about 33, almost 3,400 out there, and we're seeing about 3,200 contracts on the tape already today. No massive trades like we're seeing in SVIX that are dominating the tape. Looks like the biggest trade we're seeing out there are about 220 of the March expiring next week on the 3rd, 28 calls. So nothing sizable, no risk reversals or just straight up calls and or puts going up around the same time. Just a whole lot of paper hitting the tape out there in UVIX today. Let's look at some of the size positions. Let's do a quick top 5 out there. We're getting more paper in UVIX, obviously, than SVIX. So number 5, we got about 700 of the June 7s. Number 4, about 1,000 of the end of March 19 halves, followed by number 3, March 8th, 1,000 of those as well. Number 2, 1,100 of the end of March, again, 25 calls. And rounding out the top 5 out there in UVIX this week, 2,500 of the March 25 calls. Mr. Meatball, we saw UVIX get reverse split, then kind of erode back into the teens again, and then now shooting right back up into the low 20s. Anything catching your eye out there in UVIX land this week?
Yeah, it's a mover. It's a really good way to express long volatility on a day-to-day basis. And it's showing its teeth again, moving up 9%, back above 20. It's a great product to day trade. Not so great as a buy and hold, but if you're thinking that we're going to see a lot of volatility on a specific day, or over the course of a day or two, it's great. I'm not seeing a ton of option volume here today. It's got a little bit of action on the stuff that expires today. A little surprised we're not seeing a little bit of upside chase, but it is certainly doing what it says it does, which is move.
Jay, you said SVIX, one of your favorite holdings out there. What about its sibling product, the levered product, UVIX? Are you a fan of that as well?
Yeah, certainly. Most of the options volume, of basically all the ETPs is, it's centered in UVXY, but I think over time that'll migrate over to UVIX. It makes a lot more sense to me intuitively to trade a 2x product than a 1.5. So it needs to be there. As Mark said, it's not a buy and hold sort of product, but if you want to get long vol, you're either worried about something or the market's moving and you're hedging or whatever it is, it's the best way to do it. And it's the reverse split. I don't know why UVXY is not reverse split yet, but that has helped also. Again, I don't see a case where UVIX doesn't eventually take over for UVXY as the primary long option ETF.
That's something we've been saying here on the show for a while. So far, obviously, hasn't happened. UVIX beating UVXY to the reverse split punch, so that could certainly help. But we are still seeing the reigning king of the paper out here is UVXY, 162,000 contracts on the tape, listeners, compared to 3,200 today in UVIX. So UVIX still has a ways to go on the volume front. UVIX hanging out at about 5.5, up about 1/4 of a point on the week. UVXY has been kind of glued to this 5 to 5.5 level for some time. It really starts to get wonky once it starts getting around this 5 level. They really do need to reverse split this thing. So it'll be interesting to see when they finally do announce that here, but everyone's kind of waiting. The ADV is kind of treading water as well. 193,000 contracts is the ADV. That's up about 1,000 from this time last week. Not doing a heck of a lot. Even though we are, like I said, seeing some decent paper out there today. I said we're hanging out at a 5.5 in UVXY, and the top 2 trades out there today, 17, almost 18,000 of the 5.5 calls expiring today, followed by about 16,000 of the 5.5 puts also expiring today. So we got about 33, almost 34,000 contracts right on that at the money strike. So there'll be some happy cappers at the end of the day and some sad faces out there as well. Let's do a quick top 5 in terms of the size positions out here right now. Then we'll keep on rolling. Number 5 in UVXY right now, about 15,000 of the 5.5 calls again expiring today. So no surprise, that's an active strike. Number 4, 15, almost 16,000 of the 5 puts again expiring today. Number 3, 17,000 of the 5 calls also going the way of the dodo today. Number 2, we got 19,000 of the March 7s, and the top position in UVXY right now, 20,000 of the March 6 calls. Haven't seen a 6 or 7 handle in some time out there in UVXY, so it should be interesting. Let's keep running really quickly through the product that everyone kind of washed their hands of last year, and now it seems like it maybe starting to make a bit of a resurgence out there. We have VXX hanging out at about a 12.30 right now. It's up about 0.4 of a point from where it was this time last week. Volume-wise, actually seeing some paper out there today, about 85,000 contracts. That looks good, especially when you see that the ADV is 67,000. That's also grown over the past week. It's up about 5,000 from this time last week. So VXX starting to maybe claw its way back. It's got a long way to go. I mean, there were days, listeners, not too long ago when VXX could rival VIX for the most active vol options product out there. Those were the tail wagging the dog days. Not so much anymore, but if it can regain some of that lost luster, I don't know if it's really possible for it to regain all that volume, but if it can regain some of that lost luster, it can certainly see a lot more paper hitting the tape out there. Let's do a quick top 5 in VXX today as well. 11,000 for number 5 of the March 17s. Number 4, 14,000 of the March 15s. Number 3, 15,000 of the March 25s. Number 2, 18,000 of the March 20s, and the top position in VXX right now, 19,000 of the 13.5 calls expiring today. So those will be going the way of the dodo at the end of the day today. Mr. Meatball, I know you still watch this as kind of a bit of an indicator, but that's pretty much about it. Anything catching your eye out there in VXX this week, sir?
Yeah, Andrew started to trade this again, which surprised me, but it is, it's been moving. There's some decent action on the March 10th today. Looks like somebody traded a little butterfly. They bought the 12, 11, 10 put butterfly 1,000 times. And then we got some lottery 12 puts going up for a penny and 2 cents for people thinking, hey, if we get a full on reversal, this thing will collapse and I can turn my 2 cents into 20. I don't know if that's probably throwing bad money after bad, but that is the action. And then, some March 12s getting scooped as well. So it's a little busier today than it has been.
Yeah, you're right. I was joking with the Rock Lobster about VXX on a recent show. I think he told me he was trading it again. That surprised me. He's back into the fold just when he thought he was out. They pulled him back in. Jay, I'm curious for you. A lot of people washed their hands of VXX last year and haven't really gone back. Some are maybe starting to tiptoe their way back into it. What are your thoughts on VXX? Were you amongst the many who washed their hands of it last year, and are you paying attention to it again?
I haven't watched it in a while. I used to trade it actively, and actually, it's funny that Mark mentioned the put fly. I used to love recommending put flies when vol was kind of creeping down in VXX. And they tend to work out very well, kind of short term, 1 week or 2 week flies. But yeah, I feel that the ETNs are you use the term going the way of the dodo, but I feel like that is eventually going to be the case. Why take the extra risk on the notes, particularly with the issues that some of the banks have had, and the issues that VXX have had. I just feel like these products should be ETFs and not ETNs, and I don't think I'm going to use VXX again. Again, I like SVIX and UVX. I don't even know if I certainly see why 1X positive makes sense to have, but it's just not something I feel like I really need to have in my toolkit. So, I said I plan on using the SVIX and UVX for pretty much everything moving forward.
You're all in on SVIX. You got no time for VXX out there, Jay. There's only room for a handful of vol ETPs in the toolbox at the end of the day out there. Let's look really quickly at some of the single name vol. Obviously, that's still popping off aggressively this week. Listeners, Tuesday, we had announcements from Walmart, Home Depot, Medtronic, and Coinbase. Wednesday, Wingstop, NVIDIA, Etsy, and Bumble. Thursday, Alibaba, Moderna, Domino's Pizza, Planet Fitness, Booking Holdings, Warner Brothers Discovery, Beyond Meat, Intuit, Dish. And today we have Cinemark. Remember them, that theater chain? Haven't seen one of those around in a while, but apparently they're still kicking out there. I guess we'll find out from their numbers today. If you want to see all the latest earnings move results, earnings season, and earnings trades reports, we have them there on the old website, courtesy of our friends over there at Orat's Land. Click on the Options, News, and Articles tab to access all this data, all for free because we love you folks. That's how much we like you. 4 reports all the time throughout the week, all for free. Hop numbers coming off here. You can see the results reports for NVIDIA, for Papa John's, eBay, Moderna. We got Bumble on here, Dish, you name and the names that are popping off this week. Baba, we got them all here on the report for you. Etsy as well. You can check them out at your leisure out there. We also had new trades popping in on the trades report. We have, looks like 1, 2, 3 trades being exited this week. Took off a straddle and 2 calendars and 3 different names. Added a new straddle to the trade report as well. So we're still monitoring 61 long straddles and 41 long calendars for your earnings trading information out there. And in terms of the season, how's it stacking up right now? Hanging out at about 112%. So still looking pretty frothy, but obviously has come off a bit from the early weeks when it was somewhere around 150%. As you'll recall, I said on those shows, that's not really sustainable. And it wasn't. So we'll see how it's looking right now. Right now, week 5 and week 6 is shaping up at about 92%. So it looks like it might be the 1 week of underperformance on the season. But still, 112% average for the season. That's still really good. If we go all the way back to when we first started crunching these numbers, which was well before the pandemic, we're averaging about a 92% right now. Of course, listeners, 100% means everything moved exactly in line with their straddles. So 112 indicates we are still net outperforming on the season. So intriguing stuff to be had there. You folks can check all that out, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side of earnings. As we begin our journey into the dark side of the show, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, coming into the end of the show, we haven't seen a ton of movement on the vol front since the start of the show. VIX cash is at about a 22.20 when we kicked off the show. It's hanging out right around a 22 right now. VOLQ is at a 26.60 when we kicked off the show. It's a little bit north of 26, about 26.15 right now. I was looking good to start the show. I was at 26 double on VOLQ. I'm still working on my VOLQ model, listeners. It's a new addition to the show. Still ironing out all the kinks, but it was looking pretty good. I was at a 26 double, so I should have just declared victory at the start of the show. Now I'm about 0.4 of a point away. Same deal in VIX. I was looking a little worse before. Now I'm looking a little bit better, but hanging out still about 0.45 away. Andrew was on with the show last week. He was at a 22.15 in VOLQ, so he was way away, and 18.25. He was feeling a big vol crush this week. I was giving him a hard time for that yesterday on the option block. Mr. Rhodes, he wants in future Dr. VIX. He said 23 double for VOLQ and a 20.5 for VIX, so no joy for him there as well. Kevin, you were on with us last week. You said 22.5 for VOLQ and 18.75 for VIX. So you were feeling the big vol fade as well. Just look really quickly here. These are some of the listeners. They tried to surface the ones that were closest. 23.10 is not going to do it here. 25.20 looking a little bit better there, Frank. Not quite as close as me, but not bad out there. So we have a bunch of listener prognostications. Our producers will go through all those listeners. If you were close, you know our margin of victory within a 1/10 of a point. You too can win fabulous prizes. Alas, I was close. I was within spitting distance on VOLQ this week, but no joy for me this week. That means it's a wide open session for this time next week. And since no one won this week, Jay, as our guest, you get pride of place. What are you feeling this time next week for VIX and VOLQ, sir?
All right, well, no one ever won anything by being too conservative. So I'm going to say 1975 in VIX. And VOLQ's a little tougher. Let's say 24 even.
Yeah, I'm still working out my models for VOLQ, as you can see. Close, but no cigar today here.
Come on, guys. How is estimating at the money forward vol?
You're right.
Harder.
It's just at the money. No
skew.
No messing around with the skew. You're right. It should be easier.
Barry Goldwater won elections being quite conservative, but I don't think this is the right podcast for that.
Wow, hitting all the hits. Our listeners love the Barry Goldwater references here. The millennials and Gen Zers are going to love you here, Kevin. So, Kevin, since you chimed in with the Barry Goldwater reference, you get to go next, sir. What are you feeling for this time next week?
So my guess would be that the current kind of gap between 30-day forward measures and 30-day realized narrows. You get a 2%-ish day in the NASDAQ 100 and 1.5% day in the S&Ps, and you're going to see realized vol move up a bit. But again, that's a 30-day measure, so one day isn't going to skew it that much. My long-winded intro to, I believe we'll see VIX and VOLQ a little bit lower next week. You have jobs data, I believe, on Friday, so that will probably keep a bid up until that morning. I'm going to go with round numbers. VIX a week from now, 21, and VOLQ 24.5.
All right, there we go. Mr. Meatball, you weren't on last week, so you didn't get a chance to lose. So you get to go next, sir. What palindromic nonsense do you have for VIX and VOLQ this week, sir?
It is the only way to guess this silly game is through palindrome. I like Jay said 1975.
He did, yes.
All right, and we've got a 20. We got a 21 even. Is that right?
Bingo. Yeah. 21.
Yep. So I was just listening to Kevin. I'm gonna go with. All right. If they're all they're all fading. Let's see this puppy fall apart. How about that? Let's go 24.42 for VIX and 28.82 for VOLQ.
Oh, okay. I was not expecting that. 28.82 for VOLQ. Okay. Wow, that's a lot of living there. That's all sorts of ranges here, listeners. I can see the listeners starting to pop in with theirs as well. I won't look. I don't want to see any listener numbers to color my sentiment in any way, shape, or form. All right, let's go out here let's start in VIX land. Let's see. The models, we've got them down to a science now for VIX as much as you can. Obviously, still a difficult game at the end of the day. But we've been doing VIX for a while. You guys are all feeling the fade next week. Again, I don't hate a little bit less vol, but I'm not feeling a ton. I think you guys have a lot of the downside locked up. So I'm gonna say 21.55 for VIX. And again, VOLQ still working out the kinks. I was pretty close this week, but no cigar. So that looks like we're at about a 26, close to it right now. I'm going to say slightly lower there as well. We already got a 24. We got a bunch of 24s for VOLQ. I'm going to go a little higher then and give you guys some breathing room. I'm going to say 25 even for VOLQ for me next week. All right, listeners, that music means we have come to the end of another epic sojourn through the world of volatility. Looking at some of our listeners now, Options Queen, 25 for VOLQ, 20.5 for VIX. She's usually pretty prescient. And then we got Option God, 25.70, VIX, 21.20. All sorts of, keep those guesses coming, listeners. We'll get you all in the list. If you get within our margin of victory, you too can win fabulous prizes. All right, let's go around the horn now, listeners. Let's start with the greasiest of meatball. Mr. Meatball, sir, folks want to check out what you got cooking in the land of vol. Where should they go? What should they do?
Yeah, go to optionpit.com. You guys know I'm writing about VIX and volatility and what's happening every single day. Always worth a good read. Give it a look-see.
And Jay, if folks want to check out all of your musings on volatility and options, where should they go? What should they do?
Thanks for having me. InvestorsAlley.com. You can see me potentially make a fool of myself with my if Mark is right next week and vol does not sell off. But yeah, you can go and mock me relentlessly there.
I'm only guessing up because everyone was down.
I hope so.
He likes to be the contrarian of the bunch whenever possible. So Investors Alley for Jay and Kevin. If they want to check out all the options content you're putting up over there at NASDAQ, where should they go? What should they do?
I'm on the authors page at NASDAQ, and really I would just advocate for a better understanding of the NASDAQ 100 index. And there are, if there is interest, I write some bi-weekly stuff that's focused on macro performance data. You'll find that if you're gung-ho enough. Thank you again for the opportunity to be here, and thank you to everybody who's tuned in.
All right, that is going to do it for the on-demand side of the network this week. I want to thank all of you who joined us throughout the week. A lot of great content. Even though it was a truncated holiday week, make sure you got your mega epic dose of all the content you come to expect from us throughout the week. If you are, of course, on the pro side, hang out. We'll be back in a little bit, breaking down the week's worth of unusual activity on options oddities. Got a feeling there'll be some fun ones to break down, so stay tuned for that. Then back again next week with Monday and the option block all the way through to another Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.